Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I'm Kevin Hincks. I've got two paper money trades for you today, both companies with earnings coming out. Tesla coming out Wednesday after the bell, and Starbucks coming out today after the bell. First, we'll look at Tesla, and Elon Musk, if you look at a chart of Tesla after that sharp rally post-election, Tesla is actually for the last month down 13.7% in the last month. In the last week, down 5.5%. So it's got earnings coming out. A lot of analysts coming out with opinions, a lot of them less than positive on Tesla based on the valuation. So we'll look at that. We'll look at the potential earnings event, and we'll play for movement in either direction. And that strategy, that paper money strategy that we're going to do today, is the long iron condor. And in that case, what do we do there? We go out. In this case, I went out a week and a half. I didn't go just this week. I went out actually 10 days to the February 7th expiration. And then it's a complex trade, but it's really a complex trade made up of two fundamental trades, which is I bought the 415 425 call spread in the February 7th expiration. And then I bought the 365 355 put vertical in the February 7th. And you combine those two together, the net debit is about $5.45. Now, what you're looking for here, that's the risk on this trade, $5.45. And the risk is if Tesla were to stay range bound for the next 10 days. If it moves towards either the 415 strike or the 425 strike on the upside or the 355 strike on the downside, you're long a $10 put vertical and a call vertical. And so you're looking for this 545 debit to go at or near $10. And there's the essence of the spread. It loses money or underperforms if Tesla stays range bound. It outperforms or becomes profitable if Tesla moves. Remember, you have to move past the long strike and then past the debit paid. So the break evens, about 420 and 45 cents on the upside, about 359.55 on the downside. Those are the break evens on this trade. So those are the moves you need till this trade turns profitable. So paying 545 with the chance to get at or near a $10 credit on either side. Okay, so that's our Tesla trade for today. Now let's go to our second one, and that is Starbucks. New CEO Brian Niccol, who fixed Taco Bell, who fixed Chipotle, is now, his job now is to try to fix Starbucks and improve this company. Now, since he became CEO, the stock has rallied after a pretty dramatic gap trade, then a sell-off. It has rallied back up to around just under $100 at $99.78 it's trading right now. So what we want to do in Starbucks, look for those changes that Brian Niccol is trying to implement. I'm going out 2 weeks this time, the February 14th expiration, and buying the 99 call, which is basically the 80 cents, 84 cents in the money call, buying the 99 call, and then going into this week's expiration and selling the 104 call, which is a little bit in line, mostly in line. The expected move about $6.18 as we get to almost 10 o'clock Chicago time. The move they're looking for is $6 on the upside. That would be around 105, maybe even 106. We're going inside that just so we don't, because we know with a diagonal spread that it will flatten out up there, and that's what we want. What we do, you could do a calendar spread here, focusing on the 104 or 105 trade, but we don't want that big move. If there's a surprise move on the upside, that we don't want that profit to come all the way back down. So using the diagonal spread does that. That line comes down off its highs, but it flattens out ever so slightly. So the risk on this trade, again, the debit paid, $2.55. The unique part of this is you do get an opportunity to sell the February 7th expiration and extend duration on this trade. But you're looking for a move from the 99 level, 100 level where it is right now up towards the 104 level. The risk on the trade, again, being the debit paid. All right, that's our show for today, everyone. We'll see you tomorrow with another edition of Daily Trader. I am Kevin Hincks.